All right, let's get right into it. Because what we're seeing right now is a true clash of eras. I mean, on one side, you've got Warren Buffett, an absolute legend, the undisputed king of investing. And on the other, you've got Bitcoin, this, disruptive force of a whole new digital age. And here's the kicker. Buffett just dropped what a lot of people are calling his final warning. So, what is really going on here?
Yeah, at the latest Berkshire Hathaway meeting, Buffett did not hold back. He came right out and said it. This one quote, it cuts right to the very heart of his entire philosophy. In his eyes, Bitcoin isn't an investment. No way. It's just a speculative token, a gambling chip, that doesn't create anything real or tangible. And for him, honestly, it's as simple as that. End of story.
What's really interesting here is the tone. I mean, Buffett's been skeptical about Bitcoin for years, right? That's nothing new. But this time, this felt different. It felt, more definitive. Almost like a capstone on his entire life's work, his final, clear line in the sand from one of the most powerful voices in finance.
To really get why he's so dug in on this, you got to understand the world he comes from. You have to understand the philosophy he basically perfected. So let's take a quick look at the gospel of value investing.
This right here, this is Buffett's entire playbook. It has nothing to do with hype or chasing the next hot trend. It's all about finding solid businesses that make actual cash, figuring out what they're really worth, and then, and this is the key part, buying them for less than that. You're literally buying a machine that spits out more money.
So for anything to have value in Buffett's world, it has to do something. It's got to produce something, generate a stream of cash, you name it. This is his #1 non-negotiable rule. And these examples just make it crystal clear. A farm gives you corn every year. A factory makes things you can sell. A single share of a company like Coca-Cola gives you a slice of their profits, right? Paid out as dividends. They are all productive. They make something.
And that brings us to the only logical conclusion from his point of view. If an asset's value comes from what it produces, and Bitcoin doesn't produce anything you can count in that way, then what's it really worth? Well, from his perspective, the answer is a big fat zero. And you know what? Within his framework, he is perfectly logically correct. But, and this is a huge but, what if that framework is the wrong one to use for this particular thing? What if you need a completely different lens to even understand what you're looking at? This, my friends, is the big aha moment in this whole debate.
So the counter-argument says, hey, let's reclassify this thing entirely. Think about gold. We don't value gold because it produces a cash flow, right? We value it as a monetary asset. Why? Because it's scarce, it's durable, and people have trusted it to hold value for thousands of years. It's a totally different category with a totally different job. And that is the core idea behind Bitcoin. It's not trying to be a stock in some company. It's trying to be a monetary good for the digital age. It's competing to be the modern version of gold. Now, a massive feature of this digital gold is its absolute, mathematically verifiable scarcity. Unlike dollars, which can be printed into oblivion, or even gold, where we could technically find a giant asteroid of it, Bitcoin's supply is locked by its own code. There will only ever be 21 million of them. That's it. Full stop. And beyond just that core scarcity, its supporters point to a whole list of features that make it perfect for a digital world. I mean, think about its portability. You can move $1 billion with just a string of words. It's incredibly hard to seize since it isn't a physical thing. And its production? It's not dividends. Its production is the constant 24/7 security of a global, decentralized network that has never been hacked.
So, when you really get down to it, this debate is so much bigger than just one asset. It's a fundamental clash between two completely different systems of value and trust. It's a battle between an old-school financial philosophy and a brand-new technological revolution. Buffett's world, it's all built on trust-based finance. You trust the banks, you trust the regulators, you trust the governments. The world that Bitcoin is proposing is built on math-based finance. You don't have to trust any person or any institution. You just have to trust the open source code and the cryptography that locks it down. It's a huge shift from centralized to decentralized.
So who's right in this epic showdown? Well, maybe the answer isn't about picking a winner. Maybe it's about realizing that these two sides are describing two completely different worlds.
You see, on one side, you have the industrial age mindset, all about valuing businesses that produce cash flow. On the other, you have the digital age mindset, valuing a scarce global asset that's secured by a network. They're not even playing the same sport.
So here's the verdict. Warren Buffett's warning is smart, it's prudent, and it's perfectly logical for anyone playing in his world of value investing. But that warning? It might just be completely irrelevant to the new world being built by a new generation of people, a world that plays by a different set of rules and has a totally different definition of what value even means.
And that leaves us all with the ultimate question, doesn't it? Buffett's philosophy built massive fortunes in the 20th century. But as we push deeper and deeper into the 21st, which of these worldviews is going to define the future of money? Will it be the tangible, productive world of the past or the decentralized, digital world of tomorrow? Now that is the real billion-dollar question.